Happy Friday, everyone. Today is June 30th, 2023, which means tomorrow is Canada Day. And then 3 days from that day is Independence Day. So, yeah, a lot to be proud of here in North America, I suppose. Today, we're going to be covering a little bit of the charts, what the market did this week, more stuff about this Bitcoin BlackRock ETF, some breaking news as of this morning, and a bunch of just small, interesting stories today. Nothing too deep, just more interesting stories around the internet and finance and Bitcoin that I thought you would all be interested in. So, without further ado, let's dive into it. And pardon me, I'm still working through this newer streaming software. I have to kind of manually control everything here. Oh, okay. So I already ran into a problem here. I got to figure out how to get my screen sharing going. It should take 1 second here. Boom. There you go. Okay, cool. So today we are going to start with the charts a little bit and just see kind of where we're at in terms of the market. So zooming out to the weekly, we had a bit of consolidation last week. We went a little bit lower this week, but alas, we bounced right off of a support level here, and we're already back testing the highs. The S&P 500 is absolutely crushing it. It is pretty much all the way back to the highs. I think it might actually broke. Yes, it did actually make a higher high. So call it a bull flag, whatever you want to call it. These indexes are just not far off from their all-time highs. Bitcoin had a kind of an interesting week this week. Big reaction today. Essentially, Bitcoin was about to break out higher, and then news came in from the whole BlackRock ETF thing that the SEC was not satisfied with what they had submitted. Market kind of proceeded to dump pretty quickly at that point, but has slowly recovered throughout the day and is now kind of at the standstill, the midpoint of all the action over the last few days. So yeah, not too much, nothing, no red flags. It's so frustrating, I think, and we've talked about this on the show, and the market just seems to grind up and go up forever. Like you're always waiting for a juicy dip to come to load up on your tech stocks and whatnot, but it never quite seems to, and it doesn't really quite make sense to a lot of us with the whole macro setup. But something I want to kind of point to always think about here is that while the rates are going up, the Fed is still rushing in liquidity into these banks and really protecting them on every kind of level. And we haven't talked about this for a while. Like it seems like the whole banking crisis thing has sort of faded away. Like it doesn't really matter to too many people. But there are some signs. Let me pull up a tab here that things are still not all perfect. So you might remember back in March, the Fed came out with this thing called the BTFP program, and it was called the Bank Term Funding Program. And essentially, the reason that whole banking crisis happened a couple months ago was all of these banks had long-term duration bonds that had lost a lot of value. So the value of the collateral on their balance sheet was crushed. And so what the Fed offered to do is say, hey, we'll give you, $1 per, dollar worth of bond you have. Doesn't matter what the value is. If it's a U.S. Treasury, we'll give you the par value for it. And so that shored up a lot of liquidity in the system. And, a lot of people think now that the banking crisis is over. But when you actually look at the usage of this program, all the banks are still using it and they're depending on this. And they're borrowing at about $100 billion a week right now in assets that are pretty distressed. So in some ways, stealthily, the Federal Reserve is bailing out regional banks, and thus that's one pretty important liquidity element into the system. And then beyond that, the real drivers of this market, the real reason that it's been hard to find dips for a while now, is because the two biggest leaders, Apple and Microsoft, just continue to make new all-time highs day after day, week after week. So I'll pull it up real quick here. I mean, you probably don't even need to know this, but Apple today closing at an all-time high, blue sky breakout territory, just a total grind up from kind of this bottom here in December of last year, right after the tax selling. So, that's 15% of some of these indexes. And then, between Apple and Microsoft and Google and Nvidia, it's like half of the tech indexes. So again, you're not going to see meaningful consolidation in, specific indexes, the stock market as a whole, until those names start to turn over. And we're always looking like, is there one specific weak name? I would say that the one that looks kind of the weakest to me, but is still not what I would say a weak stock would be, Google, out of all of these. Google kind of peaked back in early June, and it's actually lower than where it was in May. But, as a whole, on a monthly chart, it actually just looks fine. It looks like it's just healthy consolidation, lots of lower wick dip buying. And, if this gets going again, then the market just keeps cruising. So, yeah, don't be in a rush to try and pick tops if you think a recession is coming and you think the market's wrong. Wait for it to prove it to you. You'll save a lot more capital that way. So in the world of Bitcoin, and Bitcoin has been doing pretty well here, there was some news this week about a ETF. So last week we had BJ on the show and tried this new format out, and we talked about how the BlackRock ETF is fundamentally different than a lot of the other spot ETFs that have been filed for Bitcoin. Many of them not having certain details as in how they're going to get the price of Bitcoin, how the custody is going to work, the trust model versus the spot model. But in something kind of rather interesting, usually when a company files an ETF, the SEC kind of stays silent on it for months at a time. They have about up to 90 days to respond to it, so they won't say much, essentially. But they came out earlier today and said that these recent spot filings by BlackRock and Fidelity are inadequate. And on the surface, that sounds like a pretty negative and a pretty bad headline. But one of the takeaways from this is that they're coming out and they're already responding, and they're giving tips to these organizations as to how they can improve their chances of getting their ETF passed, which is not something that the SEC has ever done in the past for any of these. They kind of wait until these ETFs are about to hit their kind of like date of decision, and then they just reject them, and you kind of have to start the process over again. They're kind of hand holding a little bit, which was a bit of the sign of the news this morning. So the hand-holding thing is quite a different response to these ETFs, which in a lot of people's opinion kind of raises the odds of them going through and being a thing. TED Talks Macro here was saying that the SEC says the spot Bitcoin filings are inadequate, but BlackRock can still refile for the BTC spot ETF. The news is noise here. All that the SEC is asking for is that, okay, well, you need to have a exchange that you use as a reference price for all your actions. Which one is it going to be? So they didn't say we're going to reject it. We just want a little bit of clarity as to what exchange or what bundle of exchanges are you going to use to determine what the true price of Bitcoin is. And BlackRock has specified in the past that they would be working with Coinbase on this and a couple of other providers. So I think it's like a quick amendment to their ETF application, and then this thing keeps on going. And so I passed the question on to people in this audience. What are the odds you think that there will be a BlackRock, a tradable Bitcoin ETF by the end of the year? I'm leaning towards the 60-70% mark is, and I think the market is sort of seeing it like that too. The market has been, pretty bullish, bought this big dip today. If we look at the 5-minute chart, this was the news of the rejection, big sharp drop, and then kind of a rally throughout the day, sort of just right in the middle. So digesting that sort of bad news and kind of moving forward from it. Before we jump into more news, just a quick word from our sponsor here at Beaver Bitcoin. If you are looking to buy Bitcoin for yourself, for your parent, for someone that doesn't want to deal with exchanges and just wants cold, hard, real on-chain Bitcoin in their wallet address once a week, once a month, check out Beaver Bitcoin. It's the easiest way to accumulate and DCA Bitcoin in Canada. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. This week. Okay, I don't know if that came through. It was a little bit glitchy on my end, so I'm not sure. Praveen's here in the chat. He says that I'm rooting for a complete denial of the ETF for BlackRock and Fidelity so that we can stack more. I'm on the same page. I don't really care that much. And I've totally shifted my mindset after being in Bitcoin for so many years that I kind of just like it when the price is grinding down or sideways rather than running up, because when the price is running up, all you can think about is like, oh my God, where's it going to? Oh my God, I don't have enough. Like that feeling of not having enough is way worse than feeling like I didn't sell the top, personally, just to me, after going through about 2 cycles. So I'm okay with it going sideways. I'm okay with these ETF rejections. I'm okay with a recession. More time to stack Bitcoin, the better. At this point, when you're deep enough and you understand it, the more time you feel like you have, the better for Bitcoin as a whole. All right, let's jump into some of the other news here. So this was something kind of interesting. So again, today, a lot of quickie news rather than deep dives into specific stories. But I felt this for a bit. So this is a chart of the estimated dollar amount of renewals in terms of mortgages in Canada. And so 2023, there's $276 billion worth of mortgages up for renewal. Remember, these were all mortgages received back when the rates were essentially like 1 to 2%. They're going to be refinancing at 5, 6 potentially. So big changes to homeowners in the monthly installments they're going to have to pay. But one of the factors that is really interesting is that 2025 is sort of the peak year for mortgage renewals. So it means that essentially in 2020, there were more mortgages taken out than 2021, which was surprising to me. I always thought that 2021 really was like the craziest year for housing during the pandemic, but apparently 2020 is when most of these mortgages were scooped up. And that begs the question. I'm curious if anyone in the audience is staring down the barrel of the mortgage renewal gun and seeing what's coming with these increase in payments. Is that changing your outlook on how you're handling your property? Are you more likely to move it to a rental market if you're not already? How are you dealing with what is likely to be a pretty sizable bump in your mortgage installment? One of the things I heard the other day was that in the UK, they have these things called interest-only mortgages, where you can get a lower monthly installment, but essentially you're putting nothing towards your principal and you're just paying the bank interest. And I don't know. I think that's pretty insidious. We've talked also about how, there's potentials if there's a housing crisis to have 50 to 70-year amortization periods and extensions for mortgages. So the payment plan takes 70 years to pay off a house. And I just find that pretty gross, pretty weird state that our society is in. But just remember, when we're all doomy and gloomy about the housing market, commercial real estate, all this stuff, there are all these little tricks that governments and banks can pull out of their hats to keep this Ponzi scheme going for longer. And increasing amortization periods or allowing people to get these interest-only mortgages is just another terrible way of kicking the can down the road for a lot of people. Praveen here says, driving Uber and delivering food for interest rates. Yeah, I looked into driving for Uber briefly. I think, and maybe it's because I'm broke and that I've even considered it. No, but one of the things I thought about is that I want to do more of these street interviews, and I thought like a good way to kind of warm up into it is to just do Uber and be that chatty Uber driver and see what people feel about with Bitcoin, because getting out and talking to everyday people about, money, the economy, and Bitcoin, who are not, finance heads like some of us are, you start to see a lot of perspectives and things that people have kind of picked up from the mainstream that might be a bit wrong or off, but give you a glimpse into how kind of the world is thinking about all these things moving forward. So I don't know, might still do it. That would be kind of an interesting show, riding an Uber, see if you can orange pill someone by the time the ride's over. Probably not too easy. All right. Next story here. So we talked about, these mortgage renewals that are up in Canada, a lot of them coming down the pipeline for 2025. Another Canadian story. This one is crazy. So I didn't realize this. There were a couple new bills passed in Canada, but there's this one called Bill C-18, which is forcing search engines and platforms to pay Canadian news organizations for sharing and showing their links. So the government of Canada passed a bill called the Online News Act, which requires two companies, Google and Facebook, to pay for just simply showing links to news. So when you see, you get news notifications on your phone from Google News or Facebook, they're now forcing these companies to give some percentage of profit or tax them essentially to show these links. And so what Google and Facebook have done have essentially said, we are not going to show Canadian news on our platforms anymore. So as of today, I believe you will not be recommended Canadian news on any Google platform or any Facebook platform. for the foreseeable future, which is pretty brutal. It's not like I think CBC is doing exceptional stuff or CTV and whatnot, but it's kind of important because, sometimes these news places blast out earthquake announcements or fire announcements and things like this. And Google now, as to not deal with this, they lobbied hard against the Canadian government to not put this bill through, but it ended up passing. They're now completely cutting off Canadian news from, the internet, essentially. So yeah, pretty crazy. And they have a whole article here on, how they've essentially helped spread Canadian news up to this point, but nonetheless, nothing has kind of gone through. Let's do a quick check-in on our chief Bitcoiniac, Michael Saylor, who has purchased another 12,333 Bitcoin for an average price of $28,000, so $347 million. I don't know where he's getting this stuff. Is he getting this from cash flows from his business? Like, I don't know where he's come up with $347 million. They don't make that much cash as a business. I don't know if he's taken out more bonds or loans or whatever, but stacking sats. And now I believe Michael Saylor owns 1 out of every 100 Bitcoin that will ever exist. So he still believes in it. He's been stacking now for 3 years, coming up in August. That was his first purchase, August 2020. It's actually on my birthday. August 2020, he purchased his first 500 million worth of Bitcoin at about 10,000 a coin. 3 years into it, he's still going strong, picking up another 12,000 for 340 million. The guy is an animal. And I would say, basically he's cornering the market. I have a theory that essentially the motive behind this recent purchase, because he has purchased Bitcoin over the last few weeks and months, but not to this size. I think that he has relative confidence that BlackRock is going to get their ETF approved. And since it is a spot ETF, they're going to have to go into the market and buy Bitcoin. And so he's essentially front running it, is my opinion. So 152,000 Bitcoin out of 21 million, all belonging to MicroStrategy. Better hope that they have a good custodian for all that. Quick meme here from our friends at Beaver Bitcoin. I love this because it's insane to me that overdraft fees are still a thing. So banks, when a single mother overdraws her account by $3, and then banks, when they need 50 billion, which is actually now 100 billion, in order to not completely collapse and take down the economy with it. And speaking of bailouts, and I've shared my opinion on this, and I'm curious if people disagree with me on this. The Supreme Court has rejected Biden's plan to wipe away $400 billion in student loans. So Biden was working kind of not really through Congress, but just through executive order, essentially, to eliminate about $10,000 to $15,000 or $20,000 worth of student debt. He had a lot of support from his own party for this, but this is university grad debt. This is college debt. This is not people who are taking trades courses. They also may have taken out loans through credit cards or through other programs. But if you're not pursuing higher education, you don't get a bailout from the government. Only people who went to fancy colleges and worked in the academics, not the people who worked in manufacturing or took up a trade skill, which now pay a lot more seemingly than all of these college programs. I was reading the other day, specifically here in Canada, not so much in Europe, but in Canada, plumbers are making somewhere north of $150,000 to $200,000 a year. There's a big shortage of plumbers in Canada. And then, longshoremen or working in like the tugboat industry, some of those drivers of those boats that work, and it's pretty brutal, like it's physically, taxing on you. But some of them are making pre-tax $400,000 to $500,000 a year. So not many jobs you can get out of university that pay that much. But maybe that's why we're not giving them bailouts. They don't need it. They're making better money than everyone else. So yeah, I don't know. Look, like I had student loans, I've paid them off, but to be fair, I've been in a pretty lucky situation where I had Bitcoin, and a big reason I've been able to pay them off as quick as I have is because I had wealth in Bitcoin. And in fact, I actually made my first Bitcoin purchases with leftover money from student loans. So the challenge is that like every time these things come up in government, whether it's getting rid of student loan payments or coming up with all these solutions, they're all like band-aid solutions. They never fix the underlying thing, which is that why are colleges and universities costing so much more per year than the median inflation rate? The only thing that is getting more expensive at a quicker rate than housing is university tuition and textbooks. And you got to wonder why. Like, why are textbooks thousands of dollars when information is essentially free on the internet? Why does it cost thousands of dollars to, fill a classroom? Like, what extra value are people getting per year? Are we getting a 20% better education per year? And if we're not, why are we paying 20 to 30% more in tuition every single year? And so nobody cares to question these things. Nobody cares to challenge these universities. These universities have massive, massive endowments where they're just pumping all this tuition money into the stock market. They're beating inflation, and they're charging you an arm and a leg to go to those institutions as well. So, yeah, I mean, no one challenges these things. The universities are treated pretty privately, but the government says, well, it is what it is. It's very similar to healthcare in the United States, where they have this privatized system and they don't negotiate or bargain with the Medicare providers and the insurance providers. So what happens in the United States, and this was a big part of Obamacare passing, is that the pharma companies lobbied, the Democratic Congress when Obamacare was kind of up in the rows, back in like 2010 and 2011. They lobbied Congress to basically take away their negotiation and bargaining power for prescription drugs and treatments, and building hospitals and things like that. So a lot of Americans, they come up to Canada, they buy their prescription drugs for cheaper, they come back down. And in the States, they've been trying to pass these bills to open up competition so that insurance companies could go and bid different places for different prices on drugs. And essentially, part of the reason that Obamacare passed is because the big pharma companies voted to put in amendments that prevented the federal government from going and really negotiating over the cost of healthcare. And that's a big part of how our healthcare system works up in Canada. The government will not just pay whatever price for your prescription drugs. They will go and they will find the best source for the cheapest price, and they'll pit different parties against each other to offer these drugs at the right cost. And so it's the same with, university and college education, except it's probably even less bargaining that gets done in the States with those. Like, they're just allowed to charge whatever. The federal government will give you loans. They'll increase the amount that they give in loans. And it's all very predatory. And so I understand and I empathize with the people in the United States who want to forgive student loans, because it is this huge burden on adults going to the workforce. But we also have definitely created this aura of having universities be mandatory for people. And, when you're like a 17 or 18-year-old, it is very easy to fall into the pressure of, you got to go to higher education, you got to get a university degree, and then you're going to go work at a tech company or an engineering firm or whatever. But I think those days are passing. I think the amount of free information on the internet has accelerated since the mobile age. And I have very little sympathy for people who say the only way I can advance my career, I can make a living, I can get into the housing market or whatever, is by getting a 4 or 6 or 8 year degree. It just simply isn't the case anymore. There's just too many examples of different career paths you can take without getting in as much debt as possible. You don't need to go to Harvard. You don't need to go to these massive universities, because ultimately now the tech companies don't even care. They make you pass their own standardized testing. So yeah, I mean, it's on one hand, it's brutal, like the amount of debt that people are saddled with. But on the other hand, $10,000 is not going to change a lot. And then there was a poll done where they asked a lot of these university students, what are you going to do with your relieved student debt? And most of them said that they would go and do non-discretionary spending. So they would go out to restaurants and they buy more clothes. Like, only 25% of the respondents to a couple of these polls said that they were going to put that extra savings towards a down payment on a house. So you're not really fixing anything. You're allowing people to kind of continue their spending habits, but you're not really reducing student debt in a meaningful way that people are realizing their options. And essentially, you could wipe out all of it, and you're just not going to change people's habits at the end. So all of it comes at the burden of all the other taxpayers, right? You're diluting everyone to basically bail out few. And so, again, super long debate. I'm just talking to camera and you guys over this. You probably have something that you want to chime in on, but yeah, I just don't see that as, too sustainable. Yeah, Supreme Court blocked it. So is what it is. All right, moving on. So talking about bailouts, in a weird segue, FTX is reportedly seeking to relaunch. And I had heard whisperings of this, like, oh, maybe we could relaunch our exchange under a different name. Like the technology was good. You got all these auditors now and it'll be all legit. So they recently came out with an attestation. And by the way, on July 3rd, if you were a creditor on FTX, you lost money. On July 3rd, FTX.com will reopen again and you can KYC and do all this stuff to essentially file your claim for bankruptcy. They claim to have $7 billion of assets versus $8.5 billion in liabilities. But also the IRS claims that they're owed like 44 billion. So I don't know, but if you take the IRS out of the picture, what that essentially adds up to is that you could get 80 cents on the dollar on whatever you had in FTX, depending on what asset you had. Overwhelming majority of the funds lost in FTX were US dollars, not cryptocurrency. So I don't know. I still look at it as like a whole write-off. I lost, money in that, and I still just don't expect to get any of it back. But now they're talking about, well, maybe the way we can make up the rest of the shortfall is just by relaunching the exchange and giving people equity in this new exchange as, part of the deal to make everyone whole, which is kind of crazy. I don't even know if it's worth asking, but I feel like if you lost money in FTX, there's no way I would ever trade in like a new version of it. The trust is lost. I don't care who's, in charge of it at this point. I'm just better off just like not risking it at that point. Praveen asks, are the 7 million they have all an FTT token? No, but a lot of it is, which is kind of surprising that they would even say that they have $7 million of assets when most of those assets now are like Solana and FTT, and you can't really sell those and capture $7 million worth of value. So that's kind of wacky. All right. Lastly, the IMF has now said in a recent report that banning cryptocurrency might not be the best approach. So after pressuring Argentina to ban Bitcoin and cryptocurrencies for payments, they're now saying that maybe not the best approach. It's not really going to, address the risks to cryptocurrency. People will still find a way to get it anyways. So there you go. Doesn't mean the IMF is bullish on Bitcoin, but they're just realizing what everyone has kind of realized since China banned Bitcoin, that it's pretty hard to ban Bitcoin and cryptocurrencies. They kind of just break through, sort of like emails and information on the internet. Here's a troubling story. We had BJ on last week. He knows all about people having their bank accounts shut down. All of a sudden, this politician in the UK, his name is Nigel Farage. He was a big proponent of Brexit back in the day, really rallied for it, but not really that influential in UK politics overall. And his bank just came forward and said, you are a politically exposed person. And because of that, you have to, or we're going to shut down your bank account. And so he's completely been shut out of the banking system in the UK very arbitrarily. He hasn't said anything as of recent that is that controversial. It's sort of out of the blue. And yeah, I mean, just another reason that we need Bitcoin. Again, what I think really needs to happen for people to wake up, and I hate to talk like this because it's sort of like doom and gloom, but we've really only seen one side of the political spectrum get censored. But banking and money it should be an apolitical thing. And I think eventually what you're going to see, and again, I don't like to purport this, is you have people like Ron DeSantis, and you have this like very staunch anti-woke crew. And, they're on the far right, but they also act in an authoritarian manner in some ways. So they'll, arbitrarily say, you're not allowed to say this. You're going to be open to fines for doing this. It's not illegal on a federal level, but, by operating in this zone, by teaching kids about, trans stuff or whatever, we're going to fire you and we're going to kick you out. And so I think that is also a slippery slope towards banning people's bank accounts. So you might imagine a future where somebody right-wing gets in office and somebody is like a pro-environmentalist and they go into a museum and they splash paint all over something because they think that's the way to get their message across about the climate. And you might disagree with that. You might think that's silly. But the next day they wake up and they have their bank account banned because they entered a private place and they vandalized, right? and the the local or the federal government or the provincial government or whatever pressured local banking regulators to shut down their access to finance in order to shut down their ability to protest. So I think it can cut both ways. We just haven't seen it like that. It's mainly been, the progressive left using the politicization of the banking system to censor the right and the far right. But I think it can and it would potentially cut the other way eventually. What really matters, and the picture will be a lot more clear if something like that happens, is that we need apolitical money. We cannot have a monetary system where whoever is in power can push down their political opponents, because I firmly believe, like, the left has these authoritarian streaks. We've all seen it, with the trucker protest. I don't think the right is immune from that stuff, and I think the right would do it to censor political opponents, and there's a history of it as well, right? Like Nixon and Ronald Reagan, like all these, and Trump, they all use sanctions, for instance, right? And so they would politicize the SWIFT system. They would politicize, personal and private banking, if they needed to get a message across and to create a sense of order. So yeah, we shouldn't have the power to do that. I just don't think that that's something that we should have. I think, monetary sovereignty should be a human right. It's just essentially the allocation of money across space and time, and that should be a form of human right. Just like free speech. But yeah. And then lastly, this is not the most gripping or interesting story in the world. But I've started to notice that all of these tech companies are really cracking down on people in small and subtle ways to monetize them more. The obvious one that, I've gone through is that, you can't have Netflix on multiple devices, right? Like all your Netflix devices, they have to be in the same household. And so, that one's obvious. Like, I think maybe a couple people sharing Netflix passwords have seen this screen as of late. That's fine, right? Netflix is just trying to get more subscribers, no more sharing Netflix, like whatever, right? So it's starting to creep everywhere else. YouTube has now passed a thing where they're going to let you run a ad blocker like 3 times on their website. And if you are caught ad blocking over 3 times, they're just going to cut off your access to YouTube. So YouTube is working in ways to force you to watch ads. And a lot of other video sites have had this before where they just like won't play videos if you have an ad blocker on. That's fine. But YouTube is like the biggest video platform. And now they're straight up saying, hey, ad blockers not allowed. Like if you're going to be on our platform, if you don't pay for premium, you're watching those ads, right? Who is that good for? It's good for YouTube. They make more money. It's good for the advertisers. They get more exposure a little bit, right? And then it's good for the content creators. They get a little bit more revenue because everyone's forced to watch ads. But ultimately, it's pretty rough for the users. It's going to funnel a lot more users into YouTube Premium. I'm a sucker. I pay for YouTube Premium just because of all the ad time. If you really add up, if you're watching an hour of YouTube a day, you're consuming 10 to 15 minutes worth of ads. So $10 to get rid of 10 minutes worth of ads per day, potentially, if you're that much of a YouTuber, totally worth it, right? But yeah, so moving on, Twitter also, as of last night, now you cannot look at tweets or the Twitter website without logging in. So if you don't have a Twitter account, you can't go on Twitter. It's sort of like Facebook, I guess, in that way now. But that's new as of last night. And then this last one here, this is a bit more complex, but if you don't know what Nostr is like an open source social media protocol. So anybody can join, sign up. It's not like a website. It kind of runs like email or Bitcoin, an open protocol. And they had a feature on a lot of the clients that interacted with Nostr where you could click on someone's post and then just like tip them in Bitcoin for it, right? You weren't paying them to get content, not like an OnlyFans or like a subscription service, but you could just send them a little bit of Bitcoin to show that you liked their post, for instance, like a little thank you. And it would go direct peer-to-peer to them. There was no intermediary. It's not like a Patreon thing, for example. And so Apple all of a sudden decided they didn't like that. And Apple's policy is that if there's any transactions within an app, we want to get our slice of it. We want to get our 30%, but that doesn't apply to things like Cash App. Like when you send Cash App or ShakePay money from one party to another, Apple's not getting their 30%. So money transmitting is excluded from that. It's more this rule that Apple has if you're selling content. And so they look at tipping, even though it's not selling content, it's just donating. They look at it as like a form of tipping to unlock certain things. And so even though there was like a ton of proof that this wasn't the case and it didn't really go against their own rules, Apple has still forced this app Damus to take away their tipping function within the client. You can still use Nostr, through your web browser or whatever, but for an app, you can't have it. And so this is like a compilation of all of these tech companies putting in what I would say are arguably austerity measures, right? Like they're trying to protect their walled gardens. They're trying to make sure that everyone is playing by the rules. Everyone has a proper subscription. Everyone's seeing the ads that they're supposed to be seeing. And to me, it's kind of a sign of our times. Like we didn't see any of this last year. And it's like all of these tech companies, Apple, Google, Twitter, like they're all doing it this year. And I don't think it's a coincidence. I think it has to do with them seeing declining revenues coming from not only AI, but a recession. And so they're digging their trenches in and they're trying to build their moat to keep people within their platform, paying either through money or through attention what they're supposed to be paying. So, why is Netflix cracking down now after, how many years have they had streaming for? Like 15? Why in 2023 are they cracking down? They could have done this a lot earlier. It's not like that complex of a piece of code, not that complex of a situation to figure out how to implement, but they're doing it all of a sudden right now. And I think a lot of it has to do with the austerity measures and kind of the economy that we're moving into. I think a lot of these companies see the writing on the wall. You see a lot of insider selling. And these companies need to bolster up revenue internally as much as they can. And to put these rules in place doesn't really cost them anything, but generates a lot more revenue for the other party. Google's most wanted frog. When Nostr first came out, I tried it. It's an absolute disaster. I have no idea where to find content. I can sympathize with that. I tried Nostr a little bit. There's a lot of diehards on it, but ultimately it's very hard to use and interface with. That doesn't mean that it doesn't have potential. I think it's the same as, email back in the day. When you wanted to send email, you used to have your own server. You couldn't rely on a centralized party. Try interacting and sending Bitcoin back in 2011, 2012. It was super hard to purchase it, send it, store it, move it around. They didn't even have apps on your phone. So I think Nostr is in the first inning. Now, mind you, one of the things that I don't understand about Nostr is that you have to have all these different clients, sort of like a torrent has to have all these different seeders in order for you to get like an optimal speed. And if you actually try running a Nostr client like Damus on your phone or Amethyst on your Android, it uses an insane amount of battery because rather than getting all your data from one central intermediary, you're basically torrenting tweets. And it's super, super intensive on your battery life. So I avoid the program just on that. And I don't really know if there's a way to optimize for that. It's just an insane amount of data from all these different servers you have to kind of sync with at the same time. So we'll see. I think the main thing that Nostr has to overcome is it's a very novel thing. It's uncensorable social media, but it appeals to Bitcoiners and Bitcoiners only right now. There isn't really a diverse, pool of people on there to interact with on a daily basis. It's just a lot of Bitcoiners right now. There's nothing wrong with that, but if I need to talk to Bitcoiners, I go on Twitter and I have that situation tailored out for me there. All right. I think that's basically everything for today. I'll stick around for a minute or two if you have any other stories I missed that you want me to cover. But yeah, thanks so much for tuning in. I'm trying to think if there was anything else this week. There's a lot of stuff, right? Like this was almost an episode where I was just going over quickies, not going into any particular story in depth. There are these massive protests going on in France right now around, I guess, racism with the police officers. Somebody brought up to me the other day, whatever happened to the protests against the raising of the pension age, and those sort of dissipated. But man, if there's one country and people that know how to throw on a protest, it would be France. I'm trying to see some of these. We can take a look at some of these videos here. Fires in the street, 875 people arrested here. So yeah, they're having something similar to the George Floyd protest there, because I believe a child, Moroccan and Algerian descent, was fatally shot while driving. So yeah, massive protests. But man, like look at the look at the chaos and the violence in the streets. This isn't anywhere close to what was going on in the States. I think the French are a lot more passionate, and it's pretty dangerous there. I think Macron said something pretty outlandish. I'm trying to find it. He said something about video games. So he said, this is the president, or the president of France, is he said that video games and bad parenting are to blame for some of the riots going on in France right now, which is just crazy, intoxicating the youth and fueling the riots. Show me a video game where you get to have riots in the city like Last of Us, but that's not you causing them. That's you just like walking through them. Post-apocalyptic too, not quite the same thing. So I don't know. I don't know like many video games that just promote civil disobedience and explosive protesting. But that's Macron. Pretty wild. He is definitely the Trudeau of France. It doesn't seem like many people really like him at large there, but he's a diplomat that won't go away. So is what it is. But yeah, that's it for the day. Thanks so much for tuning in, everyone. Sorry about the audio still lagging behind my video feed. Trying to figure that out. World's hardest problem to solve. But I appreciate you tuning in. Hope you enjoy your Canada Day and your Independence Day. And I will see you next week. We'll bring on some guests. If you are watching, you like talking about the news, and you also would like to come on this show, you got a spicy hot takes on stuff, feel free to give me a message as well, and we can work something out. I want to get more people from the community involved, and we can banter about the news together and cover this amazingly interesting developing world of ours. All right. Thanks so much, everyone. Take care and have a fantastic weekend.